But still in the thick of earnings, and JM Financials came out with its set of numbers. So let me welcome on board Nishit Shah, the Group CFO at JM Financial, joining in on the show right now to talk about what a mixed bag it's turned out to be for them. Nishit, hi, good morning. Good to have you on ET now. I'm just looking at your ECM business, which seems under pressure in the month of the March quarter and the lowest in the last four quarters, as I stand to understand. Largely, of course, mainboard IPOs have been very dry even in the first quarter of this fiscal. Do you see this industry pressure to continue? Or do you think, as we've been discussing since morning, it seems like all the good news has come together, since this weekend up until now? Do you think the dark clouds are finally fading away?
Yeah, good morning. Thank you for having me on your channel. So a couple of things from a JM Financial perspective, you're right. ECM activity was, in fact, the lowest in the last 4 quarters that we've seen. But having said that, as you know, we were just recently awarded the best investment bank on the M&A side. We've concluded a lot of M&A transactions in this quarter. So in fact, our profits from this segment are actually higher and the highest amongst the last 4 quarters. So that's the advantage of being a full service investment bank that we are. In terms of your question, yes, I think there is a rebound in the market we've seen over the last few days. We anticipate that a lot of our strong pipeline we should be able to execute if the markets continue to stay the way they are. Like you've rightly flashed on the screen, if you just look at the fees and brokerage, that's gone up 22% quarter on quarter, which under the current market scenario for the March quarter is a very good set of numbers.
Just to understand the NBFC business right now, where does it stand in terms of a book? And now that liquidity is coming back into the system, would you be looking at growing the NBFC business of JM?
Nikunj, that's a great question. So what we've done actually over the last 4 quarters, if you really see, it's been a year of reset actually for JM Financial. We've acquired additional stake in our private credit NBFC, which is JM Financial Credit Solutions, where we increased the stake from 47% to 97%. And what we are actually doing is that instead of doing a lot of on-balance sheet lending, we are in fact looking at our private credit business where we want to originate, invest, and more importantly, syndicate transactions. In that perspective, we generate better risk-adjusted returns. So that has been the philosophy over the last 4 quarters. And if you look at the March numbers, it's actually played out now. The provisioning numbers are as low as 7 crores. We've gone through a longish cycle as far as the provisioning is concerned, but I think it all normalizes going forward now.
Okay, and Nishit, hi, this is Snehi also joining in. Also help us understand what kind of value accretion is expected by consolidating the JM Financial Credit Solutions business, because it seems like the company has increased its shareholding from 47% to 97% also in this, if that's true.
Yes, so basically we have better control, capital allocation improves, which obviously helps in value unlocking. And in addition to that, as I mentioned, the focus will be on originating, investing, and syndicating transactions. The group structure also gets simplified in that sense. And as you would have seen, the book value is appreciated by 6 rupees in this quarter, largely on the conclusion of the transaction. So right now our book value is 101 rupees per share.
So you can grow this business, at least the NBFC business, without raising capital. That's what I can understand based on your answer.
Yeah, I think we are fully capitalized for our growth requirements. We don't see external equity raise for a long time now. And Nikunj, to your question, now we have identified the areas where we want to kind of grow the balance sheet. That will be largely on the affordable housing business. That's actually done very well. If you look at it, we've expanded to 128 branches. The AUM is 2,800 crores, which has grown by 26% year on year. So the on-balance sheet focus will be more on the home loans business. I think the rest of it is more like originate, invest, and syndicate. That's the approach we're using.
So something purely based on, as an observer and a well-wisher and someone who's tracked JM, it used to be the brand. I mean, I still remember when I was 23 years old, I came to Dalal Street and I could see JM Financials, all those old Badla boards, right? I mean, you remember them, I remember them. That's the power of this brand. But in last 25 years, if I look at NBFCs and other brands and other brokerages, including domestic and from the startup community, they've really taken a giant leap while you're still taking your baby steps. Am I missing on something? I mean, I'm curious to understand that such a powerful brand, why it has not really reached a pedestal positioning in terms of style, scale, profitability, while it is great in terms of recall. You'll appreciate the spirit of my question, right?
Yeah. No, absolutely. That's a very interesting question. You're right. I mean, the power of the brand is extremely strong. Now you look at it from our mutual fund business, right? It's more like a second innings for us. The brand recall is so strong. In just like a couple of years, we have increased our AUM to 13,000 crores. Now we see that the opportunity as far as the Indian capital markets and the wealth management business is concerned is a multi-decadal opportunity. We continue to invest a lot in these businesses now. And you are right, we may not have scaled, but there is a lot of lot of focus now on increasing the scale in all of these businesses. And you are absolutely right. The brand recall is phenomenal. We've been in the business for more than 5 decades, and we'll take it from there now.
I want to talk about another segment of your business apart from ECM. Talk to us about the wealth management aspect of your business. What important growth guidance and triggers can we expect going ahead, and what's the sustainable growth rate that we can expect going forward as well?
So right now, we have about 110,000 crore of assets under management on the wealth business. We have sort of strategically increased the recurring sort of AUM that has been increasing on a quarter-on-quarter basis. There is a lot of hiring that is happening with respect to wealth business. There is a lot of investments being done on the digital side as well as on the physical side for the infrastructure. So all of these pieces are sort of being put together, and over the next 2 years, you will see good growth in these businesses.
Reason why one should bet on your stock. It's cheap, I know that. It's got a great brand, I know that. You're getting into HFCs, I know that. What else? You've told me all that. I mean, it's such a cheap stock, I wonder that why it is not going up.
Correct. So now, as I said, it was the year of reset. We've done a lot of things over the last 1 year. The stake has increased in JM Credit Solutions from 47 to 97%. There are 4 focused businesses that we want to grow going forward. One is the corporate advisory and the capital markets business, which is sort of the leadership business on investment banking and institutional equity side. Again, we are hiring a lot of people over there and expanding the business. The second business is the wealth and asset management. Again, a lot of focus on that business. As I said, a lot of investments taking place there. The third piece, which is the more interesting one, is the private credit business, where we have built the expertise over the last 20 years, and we will look to originate, invest, and syndicate transactions. The last piece is the affordable housing piece. As I just give you the numbers, the investments have happened over the last 2 to 3 years, and they are sort of bearing results now. So AUM is up 2,800. The branches have expanded to 8 states in 128 locations. So it's all sort of pieces are sort of coming together to answer your question. And as I said, 2025 was a year of reset. The March quarter was a result of all of those, and those have culminated. And I think going forward, our focus continues on these 4 sets of businesses.
Really appreciate your time. Good luck, and let's see that glory run of GM coming back. I certainly wish you all the best for that.
Much. I'll see you next quarter.
Thank you very much.
If you like this video, then like, share and subscribe to ET Now.